The entire crypto market right now is worth about $3.17 trillion. Now, this is down from the original $3.7 trillion that we were at back in roughly the beginning of December. Now, do I think that this is where this market is going to top? And do I think that this market has topped? No, I don't believe so. And I do think that we'll most likely hit anywhere between like 5 to 7 trillion, possibly even hitting almost $10 trillion this cycle. But what I really want you all to understand is just how low of a valuation that actually is for the total addressable market that we're going after here. I mean, tokenization, institutional DeFi, you name it. I mean, the overall amount of money that this space could very well be targeting is so much larger than even just $10 trillion. But in this video, what I really want to address is how the FDIC could soon make us very, very rich. Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So over the last couple days, and ultimately the last couple weeks, this entire market has gone through tremendous ups and downs. And even right now, we are chopping a bit. And this is causing a lot of people to kind of flip a little bit bearish. And what's crazy about this is we are witnessing some of the biggest fundamental moves behind the space while the price action is chopping, while the sentiment is flipping to now, fearful levels, some of the lowest levels that we have seen since going all the way back to October, which is crazy to me. Now, if we go back in time a little bit, and I'm just going back to August of 2024, this is when we saw a report come out by Bitwise, and this was dated June 30th, 2024, and this was crypto adoption by institutions. So it turns out big banks like crypto. Now, we could see some of the biggest banks out there, Bank of America, for an example. This is the services that they offer: crypto trading and custody. BlackRock offers crypto trading and custody, private crypto funds, crypto ETPs, and even tokenization. Now, these are like all of the big players out there. You have BNY Mellon on here, CBOE, Charles Schwab, Citi, CME, Deutsche Bank, Deutsche Börse, Fidelity, Franklin Templeton, Goldman Sachs, HSBC, JP Morgan Chase, the London Stock Exchange, MasterCard, and the list just goes on here. But what's crazy about this is we haven't really, witnessed that step function. That step function is these use cases being scaled. And we really start to see these banks going all in on crypto. The big issue was obstacles in the way. There was a lot of obstacles holding these big banks back. Now, we have been hearing a lot of talk about, how these things are being removed. But what's crazy is that we now have a lot of pressure put on the SEC, on regulators, to really kind of start to accelerate things. Number one, let's go over here. Today, Coinbase urges U.S. regulators to remove barriers for banks to trade, custody, and outsource crypto services. Now, this is not, this is not something that should be taken lightly. Like, if we're starting to see the big banks become the players around crypto, guess what? That means their client base, which you could argue is in the hundreds of millions, right? That means that they have immediate access to crypto. I want you guys to understand how crazy that actually is. And when I say crazy, I mean crazy bullish. On top of this, we know that BlackRock has also been putting pressure on the SEC. He's more so looking at tokenization. I want the SEC to rapidly approve the tokenization of bonds and stocks, a major endorsement of blockchain's role in the future of finance. Check it out.
As a huge believer of crypto and blockchain and tokenization, I want the SEC to rapidly approve the tokenization of bonds and stocks. That will simplify things, make things easier. Some of the tax on BlackRock would never have to vote on a proxy vote anymore because every owner of record would be notified through a tokenization of equities. And and it would save more money for more people. It would bring down the cost of ownership of stock and bonds. So those are the type of financial reform.
So now Coinbase, BlackRock, and also Robinhood are putting the pressure on, because back on the 29th, we saw Robinhood CEO Vlad Tenev calls on the SEC to update investor rules and allow equity tokenization for startups. Now, what did we also see? Well, we know that SAB 121, which got introduced back in 2022, requiring financial institutions to list customer crypto assets as liabilities on balance sheets, this created significant challenges for the crypto industry. Well, we just saw that SAB 121 got completely repealed and replaced with SAB 122, marking a significant shift in crypto custody regulation. This basically allowed banks, it actually encourages banks to explore crypto custody. Now, I bring this up because we also saw that the Fed chair, Jerome Powell, told us that banks are perfectly able to serve crypto customers.
Our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's, you know, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks that we regulate and supervise do that. You know, the threshold has been a little higher for banks engaging in our.
So again, you know, this all happened in basically the last 2 weeks, right? We have all of the pressure being put on the big banks. We have, you know, the major players like BlackRock, Robinhood, even, you know, the Fed saying like, all right, well, banks can now, you know, serve crypto customers. They can offer crypto services as well. Like, this all has happened in just the last like week or two, which is crazy. Now, on top of that, we know that just recently banks have met with government officials to push for offering custody of crypto assets like Bitcoin, and this is all because of the FDIC announcing plans to revise crypto guidelines and allow banks to engage in crypto. Some banks have met with government officials to push offering custody of crypto assets along with tokenized deposits that could put some checking accounts on blockchains. The floodgates are opening. The FDIC plans to revise bank guidelines for crypto, aiming to allow banks to embark on some crypto activities without getting regulatory permission first. This is very exciting, and this is the actual post here that's also included in this post. But guys, I want you guys to understand that the FDIC and the big players here are now opening the floodgates to the big banks, the big institutions, the big players, to essentially go all in on offering crypto and crypto services and tokenization. The focus here is tokenization because the total addressable market for tokenization is in the quadrillions of dollars. Now, this is all happening at a time where the crypto market is very fearful. People are getting bearish because the price action is in red. You know, altcoins are down significantly over the last 7 days. I mean, even if we look at this, right, in the last 7 days, there's 40%, 30%, 20% plus drawdowns across the board. And this is causing some panic. At the same exact time that we now have the biggest obstacles being removed from the space, allowing for the largest amounts of money to flood in. Now, also, the Digital Pound Foundation put out a great post regarding what we just witnessed over the last couple days. Yesterday, the U.S. digital assets industry saw a series of significant announcements with a focus on regulatory clarity and future growth. Formation of a bipartisan cryptocurrency working group, which this is a group that's aimed at developing policies to support the growth of digital assets, which is going to be very bullish. Coinbase urges regulatory clarity for banks offering crypto services. I just went over it. This is a big request, and you know, it is coming at a time where it feels as though all of the obstacles around the banking sector are starting to get removed. Of course, Trump's crypto czar, David Sachs, envisions a golden age for digital assets. We've been hearing about this golden age for a little bit of time now from Trump, from David Sachs now. I think even, I want to say Brad Garlinghouse or Stuart Alderati did also say golden age, but this has been something that's been starting to come up in conversation quite a bit lately. The best way to do that is by being extremely pro-crypto. Outside of that, we also have new stablecoin bill introduced as part of pro-crypto agenda. And yeah, that's a big one, okay? That's a big one because on top of just the whole stablecoin bill itself, which by the way is the Guiding and Establishing National Innovation for U.S. Stablecoins Act, which is genius. It's called Genius Act. This is also establishing clear regulatory frameworks for not just payment stablecoins, but it's also defining them as digital assets pegged to a fixed monetary value, such as the US dollar. This is a big deal. Now, on top of that, we also have a breakdown on the bottom that says this contrasts with the prior administration's approach, notably seen in the Ripple versus SEC case, which hindered global growth. With these moves, the US is positioning itself to lead the way in both domestic and global digital asset adoption. And remember that all of these bills, all of these moves right now are clearing out a path to realizing in everything that we have been addressing on this channel for years now, meaning the Internet of Value, tokenization at scale, banks offering crypto services. I mean, that's such a huge one. I feel like a lot of people don't realize how significant that is because, again, there's a lot of people that are still on the sidelines of crypto, no matter what they see, right? For an example, they could see Bitcoin trading at $1 million tomorrow. The market cap of crypto can be, 10, 50 trillion. We'll just say anywhere between like 10 to 50 trillion dollars. Okay. They could see the biggest names out there endorse crypto. They don't want to touch it still. Why? Well, because they fear, crypto. They fear these exchanges because of what we've been hearing in the past, couple years. But then their bank that they trust, right? They use these banking apps. All of a sudden, their bank says, all right, we're introducing, crypto services to your app. Now you can buy and sell and trade crypto through your banking app. How many people completely drop their guard and say, well, if my bank's offering these crypto services, it's something that I could definitely trust, right? All of a sudden, they start flooding into the crypto market. Now, it's not going to be all of these coins, right? Like, we're not going to be able to buy, we're not going to be able to buy Trump coin, for an example, on the banking app or like Dogecoin or things like that. It's going to be very similar to how you have like the iTrust Capital, IRA. You're going to have legitimate based projects that have clear utility. I would argue that a lot of the coins under the Made in America section on CoinMarketCap would be included in that, list in terms of what the banks could offer. So you're going to look at this and say, all right, well, it's going to be, XRP potentially. Ethereum might be on there. Bitcoin will most likely be on there as well because, again, they're the two largest. But you're going to see a lot of utility-based projects that do have strong fundamentals and, that you could basically trust. And when I say you could basically trust, it's, projects that have been around for a while. That's why, like, when you look at the iTrust Capital, like IRA, it's definitely huge to look at those lists and look at the companies or the projects that are listed there and kind of base that off of what banks would be offering. Because in my opinion, the banks are not just going to offer like random coins and, you're not going to be able to buy Pepe through your banking app. But I do think that that's the big start to mass adoption is the banks actually offering crypto-based services. And we already have a few of them out there doing so. I mean, if you actually look at some of these platforms out there, like for example, Morgan Stanley did say that they want to offer crypto trading and custody services through their E-Trade platform. So that makes a lot of sense. And I think that once we do start to see that, I think that we're going to see a big wave. But I do think that the floodgates are opening, and I think that the FDIC is a big enabler of this. So let's watch, wait, and see what happens. But Guys, the big moves behind the scenes in terms of fundamentals are happening right now. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.